India, a nation on a trajectory of rapid economic growth, understands the paramount importance of a robust regulatory framework. Regulations are not merely bureaucratic hurdles. They are the invisible threads that weave together a tapestry of fairness, transparency, and accountability. In a diverse and complex nation like India, effective regulation is crucial for maintaining economic stability, protecting consumer interests, and fostering a conducive environment for businesses to thrive. Imagine a marketplace without rules, where businesses operate with unchecked power and consumers are left vulnerable to exploitation. This scenario underscores the vital role of regulatory bodies, the guardians of fair play and ethical conduct. These bodies act as watchdogs, ensuring that businesses operate within the confines of the law and that consumers are shielded from unfair practices. A well-structured regulatory framework serves as a cornerstone for attracting foreign investment, a key driver of economic growth. When international investors see a predictable and transparent regulatory environment, they are more likely to invest their capital, confident in the knowledge that their investments are protected. This influx of foreign direct investment translates into job creation, technological advancements, and overall economic prosperity. Moreover, effective regulation is essential for safeguarding public interest. Whether it's ensuring the safety of pharmaceutical products, maintaining the integrity of financial markets, or protecting the environment, regulatory bodies play a pivotal role in upholding the well-being of citizens. By setting standards and enforcing compliance, these bodies act as custodians of public trust, ensuring that businesses prioritize the collective good alongside their pursuit of profits. Regulatory bodies are specialized agencies entrusted with the crucial responsibility of overseeing specific sectors of the economy. They are the architects and enforcers of the rules of the game, ensuring a level playing field for all stakeholders. These bodies derive their authority from Acts of Parliament, which outline their mandate, powers, and functions. The role of a regulatory body extends far beyond merely formulating rules. It encompasses a wide range of activities, including licensing and registration of businesses, conducting inspections and audits, investigating complaints, and imposing penalties for violations. By exercising these powers, regulatory bodies strive to create a climate of compliance and deter potential wrongdoers. One of the key characteristics of effective regulatory bodies is their independence. To ensure impartiality and prevent undue influence, these bodies are designed to operate at arm's length from the government and the industries they regulate. This independence allows them to make objective decisions based on sound technical expertise and without succumbing to political or commercial pressures. Transparency and accountability are also paramount for building public trust in the regulatory process. Regulatory bodies are expected to operate in an open and transparent manner, making their decisions, regulations, and enforcement actions accessible to the public. This transparency not only fosters accountability, but also enables stakeholders to understand the rationale behind regulatory decisions and participate in the regulatory process. India's regulatory landscape is as diverse as its economy, encompassing a wide range of sectors, each with its own set of challenges and complexities. From the bustling financial markets to the rapidly evolving telecommunications sector, regulatory bodies play a pivotal role in shaping these industries and ensuring their orderly growth. The banking and finance sector, the backbone of any modern economy, is subject to stringent regulations aimed at maintaining financial stability and protecting depositors' interests. The Reserve Bank of India, the country's central bank, stands as the apex regulatory authority for this sector, overseeing banks, financial institutions, and payment systems. Capital markets, where companies raise funds and investors seek to grow their wealth, are another area of intense regulatory focus. The Securities and Exchange Board of India acts as the market watchdog, protecting investors' interests, ensuring fair and transparent trading practices, and promoting the development of the capital market. The telecommunications sector, once a government monopoly, has witnessed explosive growth and transformation in recent decades. The Telecom Regulatory Authority of India plays a crucial role in this dynamic sector, fostering competition, protecting consumer interests, and ensuring the orderly growth of this vital industry. Environmental protection, a growing concern globally, is another area where India has enacted comprehensive regulations. The Ministry of Environment, Forest and Climate Change is the nodal agency responsible for environmental protection, conservation of natural resources, and ensuring sustainable development. Section 4. Pillars of Regulation, Key Acts and Legislation. The Indian regulatory framework is built upon a foundation of key acts and legislation that empower regulatory bodies and provide a legal framework for their operations. These acts, often the result of extensive consultations and deliberations, outline the scope of regulation, define offences, and prescribe penalties for violations. The Banking Regulation Act 1949 is the cornerstone of banking regulation in India, empowering the RBI to regulate and supervise banks, control the money supply, and maintain financial stability. This act lays down the ground rules for banking operations, including licensing, capital adequacy, and risk management. The Securities and Exchange Board of India Act 1992 established SEBI as the regulator for the securities market. This act empowers SEBI to protect investors' interests, regulate stock exchanges, and prevent fraudulent and unfair trade practices. It also mandates disclosures and transparency in corporate governance, ensuring accountability to shareholders. The Telecom Regulatory Authority of India Act 1997 led to the creation of TRAI, the regulator for the telecom sector. This act aims to create a level playing field for telecom operators, protect consumer interests, and promote competition in the sector. TRAI plays a crucial role in spectrum allocation, interconnection agreements, and tariff regulation. The Environment Protection Act 1986 provides the legal framework for environmental protection in India. This act empowers the MoEFCC to set pollution standards, regulate hazardous substances, and promote sustainable development. It also provides for environmental impact assessments of projects, ensuring that development does not come at the cost of the environment. Section 5. The Banking and Finance Sector, a case study in regulation. The banking and finance sector, often considered the lifeblood of an economy, exemplifies the critical role of regulation in maintaining stability, fostering growth, and protecting consumer interests. In India, the Reserve Bank of India, or RBI, stands as the sentinel, safeguarding the integrity of the financial system and ensuring the soundness of banking institutions. The RBI's regulatory oversight extends to a wide spectrum of activities within the banking and finance sector. It sets prudential norms for banks, dictating capital adequacy ratios, exposure limits, and risk management practices. These regulations are designed to ensure that banks maintain sufficient capital reserves to absorb potential losses and operate within acceptable risk parameters. Protecting depositors' interests is paramount in the RBI's regulatory approach. Deposit insurance schemes, stringent know-your-customer norms, and robust grievance redressal mechanisms are all geared towards safeguarding the hard-earned savings of millions of Indians. The RBI also plays a crucial role in promoting financial inclusion, extending financial services to underserved sections of society. The RBI's regulatory reach extends beyond traditional banking institutions to encompass non-banking financial companies, payment systems, and even fintech startups. This comprehensive approach ensures that all entities operating within the financial landscape adhere to high standards of corporate governance, risk management, and consumer protection. The RBI's proactive and forward-looking approach to regulation has been instrumental in maintaining the stability of India's financial system, even during turbulent global economic conditions. By striking a balance between fostering innovation and managing risks, the RBI continues to play a pivotal role in shaping the future of India's financial landscape.